Hello and welcome to the 248 Emerging Companies Fund's quarterly report for December 2025. I'm Christian Jensen and next to me is Jonathan Pearce. During the quarter, consumer sentiment and interest rates were a key topic of conversation at the macro level. At the small companies end of the market, the ASX Small Ordinaries Index for the quarter was flat, with volatility returning after strong gains earlier in the September quarter. Conditions for small companies were stable during the quarter, with trading levels across the 16 companies in our portfolio generally in line with our expectations. We find it's always worth commenting on IPO activity at these quarterly reports. Although we don't generally rely on IPOs as an exit path, it's a good barometer of investor sentiment at the small end of the market. While a number of IPOs occurred during the quarter, however, performance of those IPOs has been mixed at best, with a number of them declining since listing. There are many IPOs slated for 2026, and we're optimistic that quality offerings will be supported, but we will see. We do expect to see Orbix, a small legacy position in Fund 1. We do expect to see that list, and we'll update you on that one as it progresses. During the quarter, we received the balance of the 2025 numbers from the remaining portfolio companies that hadn't reported in the prior quarter. And the first half financials for some of the companies are now starting to come through. Overall, the performance of portfolio companies has been strong. We're generally pleased with the growth in the companies that we hold and where they are each at individually positioned for the year ahead. There were no exits during the quarter, but we remain active across both funds. We have had 3 revaluations in Fund 2 during the December quarter. Cloudworks has been a stellar performer in the fund, and we have had an inbound interest to acquire the business recently. Based on performance and market multiples for similar businesses, we revalued the Cloudworks holdings upwards. Moneytech and Maneuver were also revalued upwards during the quarter. They have a preferred return mechanism built into the preference share we hold, and we recognise this in the quarter, which we hadn't done in previous periods. I'll now pass over to Jonathan to talk to you a little bit about some of the key performances during the quarter.
Thanks, Christian. Calling out a few of the key company performances during the quarter. For Bellroy, it had a strong quarter closing out 2025. Increasing luggage sales are supporting this growth, and sales for luggage continues to exceed our expectations. Retail will be a focus for the business in the coming 12 months, and we expect at least 2 store openings and possibly more, depending on the rollout opportunities that are available. Company retains significant excess cash, and capital management strategies are continuing to be considered by the company and the senior management. Moneytech had a very strong first half, a record for the business to date, and it continues to see strong loan book growth despite competition from the big banks and the non-bank lenders. New products are generating returns whilst maintaining low delinquencies. Moneytech also continues to explore possible loan book acquisitions with a strong balance sheet to support any acquisition prospects. Automotive Superstore is another strong performer in the portfolio. It closed out 2025 in typical form with a huge quarter, driving this with a Black Friday and the Christmas sales, and they continue to grow profitably. 2026 is shaping up as a formative year for the company, with high double-digit growth forecast to continue. They'll also be opening the new Brisbane warehouse in the coming weeks, on top of the Melbourne warehouse, which opened earlier in 2025. This continues to support diversified growth in the East Coast capital cities for the business. Cloudworks, as we mentioned earlier, recorded a record revenue period in the first half of FY26, supported by revenue bookings that were approximately equal to the bookings for the whole of FY25. With a strong balance sheet, revenue booking growth continuing, and a number of new key hires onboarded in the last 3 months, Cloudworks is positioned extremely well for 2026. Boost Media closed out 25 with a very profitable quarter and a strong book and pipeline coming into 2026. Profit in 2025 was up well in excess of 60% when compared to the prior year, and the outlook for 2026 is very positive. We continue to discuss liquidity options with the company, and it's a regular topic of discussion at the company's board meetings. We look forward to providing an update on this when available. Back to you, Christian.
Thanks. Now looking at the performance for Fund 1 for the December quarter. Fund One's original committed capital was $1.80 per unit. Of the original $45 million raised, distributions to date total $32.7 million, or $1.31 per unit. The remaining net asset value of the fund as at 31 December was $34.6 million, or $1.39 per unit. Combining the total amount distributed to the net asset value per unit today, and we come to a total of $2.70 per unit. The 3-month performance for the fund, net of fees, was approximately 25 basis points. Since inception net of fees, the fund has returned approximately 50%, and on an IRR basis, the fund has returned 11.6%. There are 8 remaining positions left in Fund 1. 1 is listed and 7 are unlisted. We believe there is upside in the carrying values within the Fund 1 portfolio. Each company is actively in a process or engaged in discussions regarding a sale. We'll provide investors with an update on liquidity over the next few weeks. Now looking at Fund 2. Fund 2 original committed capital was $1.80 per unit again. Of the original $85 million raised, distributions to date total $16.5 million, or 35 cents per unit. And the remaining net asset value of the fund as at 31 December was $81.5 million, or $1.73 per unit. So combining the total amount distributed to date and the net asset value, we come to $2.08 per unit. 3 months performance of the fund, net of fees, was 12.85%. Since inception, the fund has returned approximately 15.8% net of fees, and the IRR is 3.8%. As at 31 December, 10 investments remain in the fund. Again, we believe there is upside to the holding values as the companies continue to grow and improve.
Finally, if you'd like more information about anything we've discussed or in the quarterlies, please don't hesitate to get in touch with us. We always make ourselves available and we'd be more than happy to assist. Thanks for watching. Thanks for your support, and call out anytime. Thank you.
Thank you.